All right, let's start with our webinar on Introduction to Financial Modeling. And yeah, so before I start today's session, just wanted to check, are you able to see my screen and am I audible? So before I start, let me just introduce myself. Well, I am the course creator as well as instructor for financial modeling. Regarding my background, I'm Ankur Kapoor. By qualification, I have done my master's from Delhi School of Economics. I'm a CFA charter holder from CFA Institute US and also a CFP, that stands for Certified Financial Planner. Anyone in the field of wealth management or financial planning would know that. Uh, well, I started my career 12 years back with a company called American Express. I joined their uh, investment management group, working out of Minneapolis office in the US. I stayed there for around 3 years, worked on a lot of portfolio management stuff with them, moved on to a company called McKinsey and Company in their valuations as well as corporate finance team, which deals with valuations and M&A. A lot of people know McKinsey as a management consulting group, but they also specialize in various engagements on corporate finance. So I was part of that specialized consulting group of McKinsey and Company. uh, Used to travel a lot on various clients, studies and all, primarily around any mergers and acquisition, any corporate finance issues, any CFO related challenges. So I would travel a lot to help them. And for a very short stint, I was with Ernst& Young. It's a big four, but I was not part of the accounting team. I was again part of the management consulting group and used to work with top management, solving their finance issues basically. And I was responsible for setting up their finance and strategy team in India. After that, 3 years back, I moved into full-time portfolio management role because that always excited me, and I always wanted to help people manage their money and grow it. So for the last 3 years, I'm running my own portfolio management company, and I specialized in, the kind of focus I have is on direct equity, picking up stocks, some bit of derivatives wherever I see mispricing, but not trading. The same goes with direct equity, not trading, but mostly focused on fundamentals. Well, there would be, some technical opportunities also, but major focus would be on fundamentals. And fixed income, that is on bond side. I have my specialization, and obviously combining them all together is portfolio management. So that is what I do. I do not deal with private equity or private transactions. Although in my experience I've done a lot of those studies, but I'm not a big fan of those kind of investments. I don't see there is a lot of opportunity there. So majorly, focused on traditional investments there. So that is about me, and for good 5 years, I think I'm training uh, people in financial modeling. The training of financial modeling, I would say, was given by McKinsey, and I was a faculty within McKinsey also for training a lot of consultants. And when I left them, I just extended that interest in training financial modeling to everyone, whosoever is interested. So that's about me. Coming to what we will be covering today is why financial modeling is important. What is this course objective? What I've created. What will you benefit out of it? Who should take this course? And case study on beta calculation. Basic one, not a very detailed one, a basic one. goes. So let me just introduce financial modeling. A lot of people feel that financial modeling is all about Excel. I strongly feel financial modeling is less about Excel and more about your content. Because whatever input you punch in, that accordingly the output would be. The problem is a lot of people get driven into Excel-based analysis, but I strongly feel that Excel is very, very important, but you need to train the Excel to fit your requirement. If you have to just know the, how to use Excel, that's about it, and no further knowledge, then probably you'll land up working in some kind of KPO, working on some data analytics maximum, and just culling out data and so on. So you have to build understanding of what those financial models you have to create. So this training is all about creating that baseline as well as creating further, how to do the modeling part. Because this is a tool that will stay with you for life. Uh, Excel, I think, is used by everyone. Well, NASA still uses Excel, nothing else. So Excel is extremely important to be hands-on. And apart from that, a lot more focus on the underlying valuations and M&A. That is very, very critical. Uh, by attending this course, what we will get is basically an in-depth understanding of Excel, hands-on with Excel in terms of the modeling, which is, I think, critical to any job, irrespective of whatever level you are on. Secondly, it will definitely help you build a lot of deep, in-depth analysis of valuation, a lot more than theory, because theoretically, there are a lot of things which you don't tend to actually look into, but practically you have to have other means of sourcing data as well as analyzing it. So all the practical perspective. It's like, today if you have to analyze a company without any tool, without any, software, what all information can you cull out from which all sources, and how can that help you create models, and what kind of analytics you have to run. All that in-depth analysis you will do in this. Well, you will refocus and relearn a lot of your financial theory. Well, we will definitely touch upon a lot of academic stuff, a lot of theoretical stuff on the accounting side, on the financial analysis, corporate finance side, uh, and you'll just refresh your memory there. You will also further understand, how to apply whatever skills you learn and what kind of mistakes to avoid. So all those kind of things you will learn, in this, and pretty much, um, I was involved in CFA research. I was training. I'm like now here on these issues. So basically, this training will also include a lot of equity research. Very popularly known as a lot of how to basically do equity research. So all those skills you will build. How to value any merger and acquisition you will build, and a lot of other analysis, credit analysis and so on. Who should attend this course? Well, a CA candidate, a CFA candidate, a charter holder, commerce graduates, fresh graduates, basically MBA students, financial controller managers, modelers, CFOs, risk managers, treasury managers, middle office staff, general managers, PE fund managers. So pretty much, whatever I've written, these are all the students, I've trained more than 500 participants now, I think close to 600. Well, there has been a variety of students that have enrolled and engaged on this this stuff with me, and these are pretty much all the people. The reason you might be thinking that why a CFO would be doing this, he can simply delegate that, while a PE fund manager would do this. The thing is, a lot of these people rise up the ranks, and they are at times in those situations where they have to do a lot of modeling. For example, a few weeks back only, I trained one of the CFOs in a solar energy startup. So now he was planning to raise funding, and when it comes to funding, a lot of valuation thing comes, as well as a lot of Excel modeling thing comes. He is an engineer. He doesn't know anything about finance, MBA as well, but doesn't know anything about finance. So refreshing and really getting grip of practical application, how to value a company, how to be realistic about his funding estimates, and when he's arguing or having debates with the investors, what kind of argument he can bring in, and how he can overall value add even as a CFO. So just to give you an example, and I need not talk about fresh graduates or MBA graduates. For them, it's very critical because getting into job, well, it's a requirement, and having this hands-on makes it easy for you to get into job. Provided it's a related job. If you're getting into sales, well, some bit of modeling skills will be required, but if you're getting into finance kind of role, well, you cannot really live without it. What are the course content? Well, the course content would be around Excel. We'll start with Excel training, and then we'll focus a lot on financial statements. We'll move our attention to how to analyze that financial statement, do valuation, run DCF modeling, how to value a private company, and mergers and acquisitions. So all these topics we'll be covering. Well, before I actually move to the beta calculation, well, any question you have, please post it under question so that I can answer to you right now. I'll just give you like a minute in case you have any question. Just write to me. I'll be happy to answer that. All right. The first question I've got is CA student wanting to build a career in finance. So, well, as I said, CA, CFA, anyone who wants to build a career in finance, it's inevitable to have Excel skills. So it depends on which field of finance, but frankly speaking, most of the fields within finance would require a lot of in-depth understanding of Excel and a lot of modeling skills. So this course will basically help you understand what practically you have to do in terms of the job. All right, the other question I have is, a non-finance background person wanting to build finance skills, who does not have a lot of finance background, only programming skills are there. Well, as I said, Excel on its own does not really need financial theory. So that is why the way I've structured the program is, I've kept Excel separate and I've kept the theory separate so that, if you have to independently apply Excel, you're able to do that. And with respect to the financial skill, it starts from the basic and it builds on. Uh, there would be, well, as I often tell my students also, that being a chartered accountant is not a prerequisite for becoming a financial analyst. In fact, most of these CAs would fail in doing that because they are too much into accounting, too much into law. But practically what happens is analyzing the numbers, analyzing the annual report requires common sense. Building that common sense does not really relate to any background things. In fact, I personally feel that whatever you have studied in the field of finance academically, what I've seen mostly, unless you're a CFA and all, you might have read some relevant stuff, but with most of the other, the graduate level information you might have gathered is something which is more relevant, like 40 years back. Right now, it's not that relevant. And what we will do is we'll bring that lens into the picture in understanding financial statements rather than the accounting part to it. I will not lie, if you do not have even the basic level of understanding that there is something called P&L, there is something called income statement, what all is included in that. We'll touch upon that at a very basic level, but we'll not go in depth into that. We'll not go to a very school level information to do that. But as I said, even I don't know debit and credit in accounting, to be very honest. I just know that if an annual report is given to me, what to look for, where to question the management, and what kind of decision making should be done. So yes, at that level it will be covered, and I don't see that as a big challenge. Just remember one thing, that Warren Buffett was, well, I shouldn't be saying was, is not a chartered accountant or a CPA, right? He's an economics graduate, and similarly, there are a lot of fund managers in India who are not CAs, who are not MBA finance also. At times, they are just journalists. Well, there's one, Kenneth Antade, who just left IDFC. He was a journalist in financial space, and he just became one of the star fund managers in India. He has left the industry now for his personal reasons, but yes, there is a lot that goes beyond academics, that goes beyond textbook uh, uh, way of operation. So bringing that practical lens into picture is very, very, very important, and that is what we will do. I can challenge no other platform could provide you that, because I've personally worked on these deals and personally worked on these, with a lot of clients across various geographies. So I know exactly how it works, and it's way beyond that. And I would say I've never been trained formally on financial modeling by any institute. For me, the institute was McKinsey and Company, and I was trained there for good 2 weeks on this, and that was my bread and butter actually. So I used to work on those kind of engagements. So bringing that practical insight was very important. Probably I missed out one thing on that. There is a very popular book by McKinsey and Company on valuation, which is written by Timothy Kohler. So when I was at McKinsey, he was my partner. For 3.5 years, I was under his wings to be trained on these matters. He's a very, very popular guy in the field of corporate finance, and his book is actually recommended in Harvard Business School, and that is my Bible as well, apart from Benjamin Graham, Security Analysis. All right, so as I said, for commerce graduates who want to build their skill into financial space, this is very, very relevant course, because it gives you a kickstart process in terms of how to think. And trust me, even cracking interviews will get a little easy, because you'll talk practical stuff, not theory. So keep pouring all these questions as I'll move to the calculation part. Don't worry, whatever comes in your mind, just keep writing it down. I will answer that as we end this, before we end the session, I'll answer everything. So how many of you have actually heard about a term called beta? I'm sure person in finance or commerce might have heard, but not sure of others. But have you heard about this term called beta? All right. So, when we are learning this as per the academic form, yes, it is a sense. So, just to cover up the basics here, well, a beta is basically a measure of how a company's stock moves vis-a-vis market. The market could be your index, right? So, basically, it's a comparison of how your stock is moving vis-a-vis the market. So more the movement, more the sensitivity, it is considered to be more risky. Less the sensitivity, it is considered to be less riskier stock. So for example, if beta of market is 1 and the company in question is more than 1, let's say the beta calculation comes to be 1.3, then we are basically saying that the stock price movement of the company in question is higher than the market, which means that the volatility is more, indicating more riskiness in the company. Well, it's a different thing that there are other factors also to assess when you talk about the riskiness, but ignoring all those elements, when we calculate cost of equity basis capital asset pricing model, which is risk-free rate plus beta multiplied by equity risk premium, that is the beta I'm actually referring to, which goes into the cost of equity calculation. It is very critical, both at a global level or at a particular domestic geography level, to know how to calculate beta. What we have understood is, okay, it's basically a sensitivity, but how do you calculate that sensitivity? And if I give you a company, can you do that? So beta is extremely important because it is part of assessing the risk, and it is part of assessing capital, cost of equity through capital asset pricing model. You may be questioning why capital asset pricing model, because it's the only model available which is tried and tested. It is somewhere there, not the perfect model, but it is somewhere there to give you an indicative results. And how do you calculate it? Well, theoretically, as I said, it is just a sensitivity, but how do you calculate that? Well, the way it is calculated is you will regress share price of a company with the market index, right? I'll repeat, you will regress share price of the company with market index. What you have to consider is you need to have at least 60 monthly data points. You have to ignore any time period. So 60 monthly data points is basically 5 years. You have to ignore any period where the market has crashed. Say in 2008 it crashed, in 2001 it crashed. So you have to ignore that period. And you have to make sure that you're regressing it basis the geography, or basis the comparison should make logical. For example, if you're regressing an Indian company, taking a Sensex is fine. If you're regressing a US based company, then S&P 500 would be a better choice. If you are comparing an Indian company with S&P 500, is not the correct choice, or if you're comparing US based company with an Indian Sensex or Nifty, is not the right choice. So you have to make sure that this thing makes sense. So let me just do it practically here. So Yahoo Finance. So which company do we want to regress here? Let's say Diageo. No. Let's say Apple. All right. So this is Apple. So we will get. So I've just gone on Yahoo Finance, and within that there is Apple. It's a Nasdaq listed company. I need not say about Apple. Everyone owns it. Everyone knows about it. And they have done tremendously well over the last decade or so. And it is the world's most valued company, profitable as well. So you go on historical prices, you go on monthly tab here. Let's say you want it from November 30th, 2010, right? Okay, prices. Okay, I download this on a spreadsheet. Let me just look at the data here. Adjusted close. All right. This is Apple. Now I want S&P 500 because that's the relevant Yahoo Finance. Well, Yahoo, Google, one of the same thing, so you get it. If you're valuing some Indian company, there are other, apart from Yahoo Finance and Google Finance, there is a company, a website called screener.in. Even that is very nice. Yahoo Finance S&P 500. I need historical data. Let me just see how many data points we've got. 62. Oh, that's fine. We'll just need 60, so that's okay. November 30th, 2010. Monthly prices. S&P 500. All right. So let's do a little modeling here. Let's clean the sheet. Let's call it Apple Beta. I don't like red lines. Let's get rid of that. Okay. All right. And let's start from sorting here. Sort by date from oldest to newest. All right. Excellent. Let's do formatting of cells. I like this format. Probably yes. Sure. Well, I think that was better. All right. And now we need to just have some indication of what this is. This is prices. And this is return. So these are 60 data. So let's delete probably one line and it'll be good. So we need to calculate return. Now we have to calculate beta. Beta is by slope. There is a formula slope. You regress this by this 0.86. Excellent. So what does this mean? Well, this basically means that the movement of Apple stock is less sensitive, the volatility is less in comparison with the market. So I'll repeat what we have done in this just as a recap. Well, we took Apple as the company. We went on Yahoo Finance, took out all the historical numbers, and we also took S&P 500. We took the return, which is, the number we have to regress. If you regress absolute number with this, you'll not get the right number. You need to have a common denomination, which is in the form of a percentage, and that is return. So this is a price return, if I may say so, price return. And then, these are 60 data points. So I have regressed Apple share price movement with S&P 500 in order to get the value of beta. This is called regressed beta. Well, we cover in detail what regressed and unregressed and everything is, but this is a regressed beta. Where this is helpful is, as I said, it's CAPM, which is RFR plus beta multiplied by market risk premium. If I assume RFR to be, which is risk-free rate, to be 2.2%, and MRP, which is market risk premium, to be equal to 5%, then my cost of equity is basically equal to 2% plus 2.2% plus 5%, beta multiplied by. So we are getting cost of equity to be around 6.5%. Well, on the face of it, this looks fine, but I was expecting somewhere around 7%. Uh, but this is fine. Maybe we need to just get hold of unregressed beta. But I'm fine with the calculation part. So the point which I wanted to make here was, theoretically, whatever you have learned, practically you might not have studied how to calculate beta. So this is just a flavor of, one aspect of things which we cover, and practically how, how it needs to be handled. And as I said, this is just one aspect of things. There are a lot many other aspects which will be covered in the uh, course. Okay, so there are a lot of other aspects, the practical language, the industry language which is used. I think that is a very, very critical aspect of whenever we are, studying these analysis, because whenever you are talking to someone who is in this field of financial analysis, they would be able to connect with you very quickly if you're using the right words. So throughout the course, you'll be able to build that language also. That language, as we progress in various aspects, you'll understand that how that language is built. And as I said, the Excel analysis. So when basis my experience now after coaching like more than 600 participants, what I have found is if you really divide the Excel and the content separately, and what we have done is we start with Excel training. So the first session, the first module is actually Excel, which includes sensitivity, and everything is included, including running macros and everything. So that once we are on the course, working on various contents, uh, there is no back and forth happening uh, between, use this as the formatting, this is the way formula is used and everything. So there is one side of training which is given at the start, and throughout the rest of the modules we'll be practicing those. So at the end of 8th module, uh, basically you will have a lot of experience of Excel based modeling as well. I think that is a very, very critical thing to have. And earlier I used to see that people were struggling between the content on one side and Excel on the other side. That is why I just decided to, have a segregated view there, and it has created better results also. Yeah. All right. So the batch is starting this weekend from 5th December. The timings would be well, I think the timings are incorrectly mentioned here. It should be 6 p.m. to 8 p.m., but I think that can be communicated better by edureka people. Uh, I don't think these timings are correct. I only made this slide and made few changes, so I think this is incorrectly mentioned at my end. What we will be working on, as I said, more than theory, we'll be working on one company. So right from scratch, we'll be understanding its balance sheet, cash flow statement, P&L, and we'll be working through that company in terms of creating a model, in terms of analyzing that company, in terms of doing the relative valuation, DCF valuation. Everything we'll do within that company, because what I have observed is one when you're working on some practical company as a case study, I think that is the best level of knowledge you can create, and that is also better because you can test your knowledge practically. You can actually see that company live. I don't like working on dummy datas. I like working with the real datas. And when these are real datas, you also feel excited about things. if you're running numbers, if you're running the analysis, what is the result of that analysis and how it really fares with the market. And it really provides. And one more thing, before I forget that, in this, I'll be sharing with you the model, which I created by spending more than 1.5 years or something. Uh, and this is a paid thing. There is a charge of $200 or something just for this. If you buy a book called Valuation by McKinsey and Company on Wiley publication, this is available for $200. But I'll be sharing this model with you. Well, it's not proprietary anymore of McKinsey because I've made a lot of changes in that, but it is a very, very complex model, and I can bet you will never get a model of such a detailed, in-depth nature. So that is part of the study process which we follow. And other than that, as I said, the focus will be on Excel. The focus will be on, lot on the modeling skills, and then we'll be covering a lot of theory and practical view of valuations, M&A. Yeah, and the course will be, it's in a recorded form, so you will be here in live sessions with me. You can ask questions, whatever you have on the session, and you will get recordings as well, which you can play later on, and I think you have lifetime access of that. So any other question you have on this? Pretty much I've covered, what I'll be, covering in this course, and I've given you a flavor of beta calculations that, it's a very basic one. I could have complicated it further by, giving you a flavor of how to calculate asset beta out of it, but that is for the course. I think it would take a lot of time. This one was done in 10 minutes. I think when we do it in the class, it takes like more than an hour or so. But that could have, that would have given you a basic flavor of, practically how to run the numbers and everything, and how to source the data without even access to the. So as I said, I'm just getting this question here. So throughout the course, we'll be working on a real company, right? And even from an assignment point of view, will be on real company. Understanding, analyzing the data, coming up with the result is all basis the real company. And there is no dummy data. So each and every source of information which you will use or extract data from or analyze from or look into the annual report will be practically based on a real company. So tomorrow, it basically equips you to handle if you're given one company to analyze. So, you will know how to manage that data and everything. However, it will not train you on managing each and every company because, for example, annual report of each and every company is very different, right? So you need to be sure of how to work around a company, how to read a report. So what this training will equip you is give you an understanding how to read a report, what kind of information to extract from, how to assess quality of management, all those kind of things. But as I said, each and every company is different, so you will have to look into the reports, call out data, and more so, it requires a lot of experience and practice to really do the analysis the right way. So yes, this provides you a platform to know exactly what you do. In fact, when I started off, I was really, for good 5-6 years, I didn't know how exactly it is done till the time, I was trained to on various aspects, and probably I've read more than 20 odd books on just valuations and research and M&A and all to understand, how this thing works. And I've just concentrated all that information into this course to practically help you from where to start. But investments and valuations and all these financial analysis is not a one-time task. It's an ongoing task, and it requires good comfort and skill to reach that level. It takes a while to reach that level. Any question you have, I'll be more than happy to answer. Well, course fee, I think edureka would be able to tell you that, at times they're running few discounts and all, so they can just share that information in more detail with you, because there would be some dollar denomination or Indian currency. So that is what they have to deal with. So they'll be able to get in touch with you, tell you the course fee, offer discounts if they are available right now. So usually, the live sessions help you because you can come on call, you can ask questions, you can share your screen. I can help you fix up a lot of Excel-based, concerns if you have. So from that perspective, these live trainings really help you. With respect to recordings, that stays with you for any form of reference. Well, it solves 80% of the issue, but at times people want handholding, so that handholding can be done. Well, the main focus, as I said, is primarily on the how to practically do things rather than just the theory element. So valuation, equity research, merger and acquisition, financial modeling, how it is actually done, and make you basically job ready. Whether you are in a job right now, it prepares you for the nature of job you want to get into, or if you're a fresher, it really prepares you to handle a lot of you know, interview related questions. And I can tell you that you would even have information which is more than what at times interviewer would have. In case you have any question, you can ask me right now, or um, you know, for any fees related information, you can reach out to Edureka. I think Edureka will also reach out to you to explain further. And in case you have any question in terms of the pattern we would be following and the focus we'll have, any specific question you have, like if you want to get into a particular role, will this help you or not, you can ask me right now. Well, the kind of field you will get into, well, it's like plethora of options. So anything you can think within the field of finance, say credit analyst, um, equity research, financial modeling, uh, even accounting related jobs, budgeting kind of jobs. Modeling is really helpful. Uh, M&A modeling, mergers and acquisition modeling, any KPO, BPO, equity research roles would be suitable. A lot of brokerages, brokerage houses, financial services companies would be more than interested in taking you. Any financial planning organization would be happy to take you. So whatever field of study, field, the career you can think of in the field of finance, it will help you, unless you just want to be in core accounting area. Probably in that case, some bit of Excel is used, but that Excel, I think you can learn on the job as well. Uh, but apart from that, the focus on financial analysis and the focus on uh, other things beyond just the accounting is our main key area. So that is where, this is different. So, well, a lot of IT programmers are, if they understand the business better, I think they can add a lot of value. And I've also seen a lot of my participants have moved from typical of their programming skills and moved into actually financial analysis roles within the same company or outside, uh, where they were able to bring that a keen interest, passion for the field, as well as a lot of knowledge they were able to acquire. And these, the financial modeling part will help you build that knowledge. Well, it will be incorrect to say that in just few days you will be expert enough to challenge everyone. That's not going to happen. Uh, but what really prepares you, it will, if you are really passionate about moving into more advanced business roles within the financial services industry, it will provide you that understanding of what aspects to really look into and how to analyze the company, how to, what this guy who is sitting in the financial analyst team does. Uh, so from that point of view, it will help you. Uh, and, it really helps a lot of people to shift careers actually. And as I said, irrespective of the level in the company, uh, when you're looking for growth, people expect you to have a lot of um, business side knowledge. So this is that business side knowledge of financial services companies. So in the past, I have trained a lot of Goldman Sachs programmers, Credit Suisse programmers. So these people are on business side roles now. No, as I said, lack of accounting knowledge is not a deterrent at all. Because what I want, well, you'll be surprised to know that a lot of chartered accountants actually flunk uh, in top B schools because they carry that accounting knowledge way too strong, and they tend to ignore that they have to learn a lot more when it comes to financial statement analysis than what they already know of. In fact, you read a lot of letters from Warren Buffett, which he writes to his shareholder, and he says that he doesn't understand accounting a lot, but he does understand to challenge accounting, not from a law perspective, but from common sense or a shareholder or an investor perspective. So that does not really require a lot of legal aspects of it. So the way it is structured, it starts from the basic and it builds on that. Obviously, if you have no clue whatsoever in the past, you might have to put in that extra effort of knowing the basics and moving. But we will be covering basics in the course itself. So, no MBA or no accounting background is not a drawback. All right. In case you do not have any question for me, you can actually log off. Most welcome.